Hello and welcome everybody to the Gold and Silver Club presenting Commodity Markets Outlook for the 24th of March 2016, presented by myself, Phil Carr, at the Gold and Silver Club. So today we'll be analysing the latest developments in the commodity markets. We'll be discussing our outlook for the week ahead. So we go through a bit of a trading plan for the rest of today, and as we head into the Easter weekend as well. The live session will be covering an overview of the commodity markets. We'll cover top trades of the week, live market commentary, trading ideas, and of course, we'll be answering your questions as well. Do make sure if there are any questions or comments as we go through the different charts or go through different markets, do let me know in the chat function, and we can certainly go through those as we progress with the presentation. So before we go through the markets, let me introduce you to the Gold and Silver Club. The Gold and Silver Club is the world's #1 commodities trading and investment coaching company. We're regarded as the go-to authority on commodities trading, and as internationally respected experts, our analysis and our opinions on the metals, the energies, and the agricultural markets are routinely sought by major financial television channels and publications, which include Bloomberg, Reuters, CNBC, Global Banking and Finance Review, the Wall Street Journal. Of course, it's a pleasure to be here on FX Street as well. Our team of experts has trained and mentored over 100,000 private traders from all over the world to increase their wealth, generate substantial monthly income through commodities trading using our signature strategies. So for more information on the Gold and Silver Club and our expertise, please feel free to visit our website, which is www.thegoldandsilverclub.com. Right, we'll have a look at the price of gold at the moment. Currently, gold looking very interesting, trading at $1,221 per ounce after a drop of 2.6% to the downside yesterday. So we'll take a look at that very shortly on the charts. Before we do so, I'll review the top trades of the week utilizing the Gold and Silver Club signature trading strategies. So after last week's FOMC statement, we had a lovely opportunity to ride a breakout trade in both light sweet crude oil and Brent crude oil as well. So we took an additional position on light sweet crude oil, which we came out of towards the end of the session on Friday, ahead of the Baker Hughes report, for a 240-point gain to the upside, as it just came very shy of a key technical level of resistance. Brent crude oil also off the lower end of the trend channel, supported by fundamentals last week. Lovely breakout, 3 white soldiers formation, 225-point gain on Brent crude oil. And platinum also gave us a quick follow-through trade off the lower end of a major support zone, 320 points after the FOMC statement, and we got the following breakout from that move. So some of the top trades that we've had over the last week, and we'll talk you through what we're having a look at the moment. So I'll move over to the technicals again. Any questions or comments, do put those into the chat and we can go through those during the course of today's session. First market I want to draw your attention to is the VIX, the volatility index. So this gauges the fear in the market. Okay, so we can see at the moment, I've got this on the weekly time frame, and I find it very interesting where we are sat in the context of price right now. So you will note that the VIX has been directly inversely correlated to the double bottom that we've had in oil and also equities, more specifically the S&P 500, also the Dow Jones. So when fear was rife fear, when we saw fear break out to 2016 highs over January and February, that corresponded with a double bottom as well in equities. Now, since then, we've continued to see the VIX come down week after week. We've continued to be selling off here, but we have come in to a key level of support. So far on the weekly, we are getting a rejection candle. So this is on the weekly chart. And if we form a rejection candle going into the close tomorrow, and that then confirms to the upside, I expect there to be more potential downside for equities and oil as well as we progress. So this is a great inverse correlator for oil, for equities, and it gives you a very idea of where traders are positioning themselves in the market. We're also seeing, as we come towards the end of the week, we're going to see very thin trading tomorrow, as it's a bank holiday in many countries around the world, so there'll be less trading. And also Monday, you've got the UK close as well, so we could get certainly the volumes start to reduce over tomorrow and into Monday as well. So at the moment, the VIX is poised for a potential move to the upside, which is corresponding to, at the moment, we are seeing weakness right now in equities. So if I just go over and I can show you here, for example, the S&P 500, which we can see so far today starting to roll over. It's come into this major area of resistance above. I'll keep it to a raw chart at the moment without all the indicators, just to keep it super straightforward. We do use a lot more indicators than this, but this is a nice raw chart, the S&P 500, just so you can see what's been happening over the last 24 hours. So essentially, yesterday we produced a close below the last 4 days worth of lows. We broke through a key level of support here, and you can see starting to rotate lower. And you've also come up to a major overhead level of resistance here. Why am I looking at the S&P 500 if I trade commodities? Well, it's very strongly correlated to oil at the moment. It's the strongest correlation there has been with light sweet crude oil and the equities, particularly the S&P 500, in over 26 years. These two markets are in lockstep at the moment. So by looking at the volatility index, by looking at the S&P 500, it gives me a very good idea of the next move here for oil as well, which I will come on to next. So at the moment where we've come up to the S&P 500, we've broken through some support here. We're rotating lower at the moment. You've got the potential for the start of a rolling over formation. We've got overhead resistance here, downward trending channel. You've got quite a lot of congestion here on the chart as well. You will note where we've come up to resistance here, about 245. This was previously supportive zones going back to August here. We've seen quite a lot of support there. Could be support turn resistance. Needs more confirmation to really follow through, but it could be the start. It could be the start here of a rolling over formation as we start to see profit taking on the equities. Now, if we go over and have a look now at the context of this with oil, you will note the pullback that we've had on oil as well. So this is Brent crude oil, and this is this is light sweet crude oil, and this is Brent crude oil. So if we have a look at light sweet crude oil first, we've caught a lot of this breakout. We've caught the initial breakout, which was a double bottom. You had a nice neckline here at 34.80. We took the breakout. We also took corresponding breakouts to the upside, particularly again after we consolidated. We broke out for the FOMC statement last week as well. We came up to a very key level of resistance here, overhead resistance last week, produced a rejection candle at that zone, which was a very clear signal for us to start trailing up our stop loss a lot tighter. And then we've come out of that as we've seen the market rotate lower. So we're now neutral on oil. You remember the previous sessions we've mentioned that we've had long positions on oil. I'll talk you through our current position shortly, but we don't have a position now on oil. We're waiting for the next setup. So what I'd like to see today, we've got the Baker Hughes report, which is coming out later today. It's coming out today instead of Friday because we've got the bank holiday in the US tomorrow. So that will be important for the next move. Also note, part of the correction that we've seen over the last 24 hours here on oil has been down to crude oil inventories, which rose significantly above what was expected. The increase was 3 times larger than anticipated by analysts, so that has led to more downside today. The US inventory data provided profit-taking opportunities. Trading is expected to be thin on Friday ahead of the Easter weekend, so you're seeing traders take profit. You've got to remember, so far, oil over the month of March, it's moved 13% to the upside. So it's been the best month so far for oil since April last year. So we've seen significant moves. We came up to $40 a barrel. That was really encouraged by optimism that OPEC and its major non-OPEC counterparts could strike a deal next month. That meeting is on the 17th of April to leave supply unchanged at January's levels, and that could help to mitigate one of the largest global buildups in unwanted crude in modern times. That meeting, which has helped really a lot of this upside momentum, is going to take place on the 17th of April. However, the continued rise in US stockpiles to record levels has reversed the sharp rebound in prices driven by plans among major producers, including Saudi Arabia and Russia, to freeze production. So you can see there's quite a lot going on here. So at the moment, where we're sat technically right now, I want to see whether this is going to be a further correction. At the moment, it looks like a healthy correction. Oil did need to correct. It's moved significantly to the upside. It was overdue a pullback. The big question is this just a short-term pullback for oil? It's still within a very significant upward trend so far over the last couple of months. Got a double bottom in the market so far as well. It's whether this is start of a much larger correction here with oil, whether it's going to follow through, whether we're going to see equities start to follow through to the downside now, whether the volatility index is going to start increasing. So whether we're going to come out of a risk on market sentiment, and we're going to start seeing traders taking profit on equities here as well. So this will be very interesting as we head into the close today and as we head into next week as well. So it's the start of a potential larger correction, or we might find we just get bought. This pullback gets being bought into as we head into the close today and as we head into next week as well. So if we go over and have a look at Brent crude oil, we're currently sitting around trend channels. We're above some key moving averages right now. Again, just looks like at this point in time, looks like a healthy correction, a healthy pullback for oil, but to be decided by the Baker Hughes report today, by how oil closes this week and how it moves into next week. It still has managed to get a lot above a lot of very critical levels of resistance here. So oil is overdue some profit taking, a bit of a pullback at the moment. If it continues to hold, creating high swing lows on the chart, if that gets supported just to the left here, if we see this key level of support on Brent not get broken and close below 38.29, this could just be a short-term pullback in oil here. So we definitely continue to monitor this very closely. Right now, neutral on oil, not adding to any positions. We've caught the majority of this move to the upside via swing trades and continue to monitor that with our trading stop losses. But right now, on the sidelines of oil, waiting to see how this is going to close. Now, if we go over to gold. Now, gold, you will remember, hopefully you will remember this, we discussed this previously, the potential for gold to form a head and shoulders pattern. Okay, so we discussed this last week. Now, if you remember last week, we were getting the beginnings of the right shoulder. So I mentioned that it could start to move into a head and shoulders pattern. Look what's happened. So this has been very, very interesting here. So we put the left shoulder in, which was the peak that we got. Well, this was where we formed a low in the stock market. We got a peak to the upside in mid-February. We then rallied following on from the ECB meeting, which was earlier on in the month of March, but we then saw a lot of selling pressure. It was interesting that that didn't follow through. 3 times gold did not manage to really pierce and properly follow through from rejection. You got overhead resistance at 1280, didn't break and close above that level. Sellers coming into the market, supported though by a lot of investment. We've seen money managers, institutions with very strong hands here coming into gold off the back of the CFTC reports, which we've seen week in and week out as the net inflows into gold has continued to increase. So there's a lot of institutional money which has come into gold this week. So the corrections haven't been as severe as perhaps you might normally expect after you've had such a runaway move to the upside with gold up 23% earlier on in March here. But we have had a bit of a corrected pullback. So far, it looks like a healthy correction at the moment. It was anticipated. We didn't take a breakout on gold last week off the back of the FOMC statement because we were aware of this formation, which if we weren't able to break above the previous highs, it would create a right shoulder here. And you can see here where we've had this rolling over formation. And really over the last about 2 weeks or so, gold has been downward trending, is creating lower swing highs to the right here, lower swing lows as well. And you can see we've come down to the lower end of a trend channel at the moment. Now, what will be interesting with gold today is if we continue to see capital flow out of oil and flow out of equities, that will lend support here for gold as well. So it is something just to bear in mind. So let me just go over to a different chart on gold. Yeah, there you go. So we come back down to the lower end of a supported channel. If we close today with a strong rejection candle at the lower end of this trend channel, and you're seeing we're getting some good buying at the moment, we're seeing quite shallow pullbacks on gold so far this year. We haven't really had very significant pullbacks at this point in time. So I want to see whether we will get a further move to the downside with oil today and equities. If they close really bearish, gold could just get bought into the close here and represent a short-term buying opportunity back up towards resistance here. So I'm monitoring gold very closely. Silver, do not miss out on silver here. Potentially silver, it's had a nice corrected pullback. Silver pulled back yesterday 3.7%. Okay, so that was in one day we've seen silver pull back 3.7%, platinum pull back 3.2%, and gold pull back 2.6%. If silver produces a nice little rejection candle by the close today, this has the potential to offer a nice little risk to reward here. Okay, so I'm looking at this very carefully. You've also got this golden cross here, crossing of 2 very significant moving averages, which have been very supportive for investment demand. You've come back down to lower end of the trend channel. Could be a case we're just rotating back towards lower end of support here, creating a lower swing high, sorry, a higher swing low on the chart, and also a higher swing high here as we continue to form a very strong base here with silver with this recent move above key supportive zones. Silver's done very well on higher time frames to break out of major weekly zones and monthly zones as well, and this pullback could be taken as a good buying opportunity, but it's not confirmed for me yet unless we produce a good rejection candle over the course of today and that follows through as we head into next week. So watching silver very carefully at the moment, but I do like silver and gold at the moment after yesterday's corrected pullback for potentially an entry, but I need more confirmation at the moment. They're not quite ready yet right now. Now, the US dollar is one to watch at the moment. So we looked at this last week and we covered it in detail for all of our traders at the weekend, where we come down into oversold territory here with the US dollar being a very significant move. Number one on the ECB statement, we got that bull trap where we saw a breakdown in price. And again, last week in the FOMC statement, we saw good follow through to the downside. we have come back down to a supportive layer, both in terms of horizontal support and also a trend channel here. We've seen a corrective bounce over the last 5 days, which has been quite significant. 5 days of continued breaks above the previous day's high, and higher highs, higher lows here. But it's whether the US dollar is going to run out of steam here. A bit of a rejection candle forming just at the moment here as well. You could argue that there's a new trend channel forming here as well, and we might rotate lower if we produce a rejection candle into the close, which could be supportive for the metals. So there's quite a few different dynamics to take into account here at the moment. But US dollar, I'm watching that carefully this afternoon. If it does produce a rejection candle, if it comes back down, starts to rotate low, if this is it for just the retracement, it starts to come back lower, that would lend support to a potential move to the upside for gold and silver. Now, I would also very carefully watch the grains and also the softs. Now, in particular, a market which is of a lot of interest to me right now is coffee. Coffee has had a runaway breakout over the last few days here. Coffee, in fact, moved so far 26% off its lows of 2016 to date. It's had some incredible breakout to the upside. Another market which has done very well this year is sugar, up 28%. Just to give you some stats on the agricultural complex, so far off the 2016 lows, cocoa is up 16%, coffee up 26%, sugar up 28%, cotton up 8%, wheat up 10%, corn up 7%, soybeans up 7% off their 2016 lows. There's a pattern here. The agriculture markets have had a tremendous run so far in 2016 off their lows. And I am seeing pullbacks as buying opportunities. So the move that we've had to the upside so far on coffee, I'm looking at this as a potential buying opportunity based on the pullback that we've had so far. We've had an incredible move over the last couple of days. Coffee hasn't really given many traders an opportunity to get in on this move. Once it got a break and a close above a major resistance channel, it's just follow through, follow through, follow through. Hasn't really had significant pullback until yesterday. And today, if we form a nice rejection candle towards the close, if you trade coffee, just be aware it opens from 9:15 a.m. London time to 6:30 p.m. London time. So you need to get those trades in before the close. But ultimately, I'm looking for a good rejection candle to form around its current zone between 130 down to 125. If we get one today, we're going to be buyers here of coffee. I also like soybeans and also corn here at the moment. Soybeans got a significant close earlier on this week above some major resistance. It's toying a bit with the key moving average here. It has got underlying support. Fundamentals are supporting more upside here for soybeans. So I am watching this very carefully at the moment for more upside as we continue to progress here. The overall price structure of corn as well, since we broke out of this underlying resistance channel, we continue to be in our swing trades with corn, which are moving nicely. Over the last week or so, we've continued to see corn really just consolidate, but I'm looking for the next leg higher here on corn and wheat. I'm also looking at pullbacks as buying opportunities here. Would like to see ideally hitting my strike zone here about 450 to 455, get a pullback to that zone and get a supported bounce around that layer. I would be interested in a potential buy, but I'm waiting for confirmation as well. But overall, the agricultural complex has had a very good run so far this year. Just taking you back to oil again, I'm just watching it from my other screens here. Yeah, it is definitely, you can see the momentum to the downside at the moment. That is inversely supportive for gold and silver right now. So if we continue to see oil follow through, if it breaks and closes it, well, if it closes near its daily lows today, and if we see follow through tomorrow, well, in fact, oil, I believe, will be closed tomorrow. Gold, the metals are not closed tomorrow. Oil will be back open on Monday. But if we do continue to see a bearish close here, that would lend support to the metals. So just being patient at the moment, waiting for the next high quality setup on the energies. We've caught the majority of this move to the upside through swing trades, and we are now waiting for our next position here. And also metals, very curious to see how they're going to develop over the course of the US session today. And I would definitely have the energies, the agriculture markets, the grains and the softs on your radar. And I will put it back on to, we'll just put it back on the VIX, which is what we started off the session with here. Do keep an eye on this, okay? So this essentially monitors your fear in the market. If this continues to build support into the close this week and we see that follow through next week to the upside, that could be the start of something more significant with equities. We could start to see a rolling over. If oil continues to sell off, it's looking quite bearish today, you will continue to see weakness also in equities. So as we mentioned previously, look at the S&P 500 where it is right now, starting to roll over, but it's not confirmed yet. It's got more work to do to really start to do that. But you can have a look at oil for confluence there, and also have a look at VIX, the volatility index as well. So what I'll do, just a quick check-in, guys, see if there's been any additional questions. Okay, great. Fantastic. Yeah, just a quick one. If you, if at any time there the screen freezes, just make sure you refresh the browser. You will be able to see my charts will come up for you, and you'll be able to see those more clearly. Okay, good. Right. So what I'll do, I'll just go over a quick summary of ultimately our training plan, which we have over the course of today, and as we head into the Easter weekend here as well. So essentially our trading plan at the moment, we are continuing to be neutral on oil for the time being. We're waiting for a better quality setup to form. We've got Baker Hughes report, which is coming out at 5 o'clock London time today. So we are going to be waiting for the next high quality setup to be produced. Gold and silver, we took our profits, majority of those profits off the table last week prior to the FOMC statement. So we don't have new positions on that at the moment. We are waiting for the next high quality setup. You can see that rolling over formation again, the head and shoulders formation, which we discussed last week, has actually played out perfectly here on gold and was a reason not to really get in last week unless we breached above the previous swing highs, which were sitting at 1282. So you've seen this rolling over formation. The big question is here is how significantly will we pull back at the moment? So for those of you who like to use Fibonacci, you can just have a look at that and you can see really the next key levels in terms of Fibonacci on the chart. At the moment, we've breached through first support, which was sitting at 1226, broke through that. That was the level which got supported last week on the FOMC statement. We've broken below that level. You've got the potential. You've broken essentially through a major trend channel here as well. So you could also see where we broke through that yesterday to the downside. Now we've got a neckline which is sitting just at the daily low today, so it's at 1211. You've got the potential, if we continue to break down, to rotate to 1192, and then I would suggest 1160 will be quite a key strike zone here on gold as well. The area which I'm most interested in for a potential buy on this pullback is sitting between 1225, the current price, down to 1180. So this whole zone of $40, this is currently a zone where I'm looking for buying opportunities. I'm looking for rejections around that zone to give us another opportunity to get back in for the next leg higher here, but also monitoring silver very closely as well. So I would definitely suggest you want to have silver on your radar after the pullback yesterday, quite a significant pullback of a 3.7% move to the downside. And of course, we're watching the agriculture markets very carefully as we head into the US session today as well, and look for the inverse correlations on the US dollar index too. So hopefully that helps give you a little bit of a plan for today's session, or shed some light on what we're looking at as we head into the US session and into the Easter weekend as well. If you would like to access exclusive daily commodities analysis, live trading ideas ready to implement, there is an opportunity for you to join the Gold and Silver Club, our private members live trading room. Essentially what that includes at the private members live trading room includes the following. You get exclusive weekly live trading room webinars. You get access to those webinars. You get live trade setups ready to implement, real-time trade notifications of all the trades that we are entering, exact details of where we're entering the trade, where we're exiting the trade, stop loss on each trade, the trade management around those. You get live interactive Q&A via weekly webinars. You get a week ahead market forecast video and trade watch list, which is gold dust, a personalized trading plan tailored for your trading goals, access to ongoing mentoring and support, and institutional level trading research and market insights. That's all included by being a member of the live trading room. So essentially, if you would like to find out more, you can fill out an application. Just go to www.jointhegoldensilverclub.com. Membership is by application only. Once you've completed the application form, we'll of course get in touch with you ASAP. Okay, so it's just www.jointhegoldensilverclub.com to make an application for the live trading room. If you would like, you can also just contact us directly to find out more information. Our UK number is 0207 193 0403. Our US number is 01646 808 0403. For our Africa office, it's +27 11 083 8403. And for our Asia office, it's +852 8191 0403. So I'll leave those numbers on the screen for a second. In fact, just coming back to this, the link here, it's www.jointhegoldensilver. I'll put it on the chat there as well. Super easy, silverclub.com. So it's www.jointhegoldensilverclub.com. Okay, fantastic. So yeah, thoroughly look forward to working with those of you who will be making an application to the Gold and Silver Club. I wish you all a fantastic Easter weekend, and we look forward to catch you here on the next one, guys. Okay, Have a great one, profitable trading, and we'll talk to you real soon. Thanks, guys. Take care. Bye-bye.